If money controls the world, then the real question is, who controls money? Every country on Earth has banks. Every citizen depends on them. Every government claims to regulate them. Yet almost no one ever asks the one question that matters: who actually owns the global banking system? Because if you follow the trail long enough, every loan, every interest payment, every crisis, you eventually reach an uncomfortable truth. Banks don't simply hold money. They manufacture it. They don't just influence governments. They shape them. They don't merely participate in the global economy. They define it. And yet, most people still believe banks are ordinary commercial businesses. But banking is not a normal business. It is the core architecture of the modern world. And nothing about it is as simple as it looks. Ask the average person who owns their country's banks, and you'll hear predictable answers: shareholders, investors, maybe the government. But that explanation ignores a deeper reality. A factory belongs to its shareholders. A tech company belongs to its founders. A bank, however, does not belong to whoever owns its stock. Once your money enters it, a bank belongs to the system that allows it to exist. The moment you deposit money and the moment a bank lends it out, your savings are no longer your personal property. They become part of a global web of credit and debt. Banks appear private on paper, yet functionally, they are public utilities, intertwined with the state, the market, and society itself. In truth, the owners of the banking system aren't individuals. They are the institutions that rely on banks to survive. Governments, central banks, corporations, pension funds, and the public itself. But a web this vast wasn't built overnight. Its origins stretch back nearly 700 years. Long before Wall Street or London's financial district existed, there were the Florentine banking dynasties: the Bardi, the Peruzzi, and the Medici. They pioneered a revolutionary idea: a bank that didn't just store wealth, but created credit. With nothing more than a ledger entry, they transformed promises into power. Kings borrowed from them. Popes borrowed from them. Wars were financed with money that had never physically existed. The Medici didn't rule with armies. They ruled by controlling the flow of money. And once the world tasted that power, it never returned to the old system again. By the 1600s, banking families had become banking nations: Amsterdam, London, Paris. They created central banks not to protect depositors, but to stabilize governments through controlled debt. The Bank of England, founded in 1694, wasn't designed to help the public. It was created because England needed funds to fight a war it couldn't afford. In exchange, bankers were granted a privilege that still shapes our world: the legal right to create money through credit. That was the moment money stopped being a metal you could hold and became a promise you could trade. Today, the world runs on a two-layer structure. At the bottom are commercial banks: Chase, Citibank, HSBC, Deutsche Bank, Santander. They manage deposits, issue loans, and circulate credit. They seem powerful until you compare them to the institutions above them. At the top sit the central banks: the Federal Reserve, the European Central Bank, the Bank of Japan, the Bank of England. These institutions don't compete. They decide. They set interest rates, regulate liquidity, and act as lenders of last resort. If commercial banks are the bloodstream, central banks are the heart. So who owns the heart? People often assume central banks are government agencies. Others claim they are privately owned. Both explanations contain some truth, but neither captures the full reality. Central banks are hybrid entities: public by law, private by structure, and independent by design. The Federal Reserve is not owned by the U.S. government, not controlled by Congress, not accountable to voters, and not allowed to be fully audited. It exists because legislation created it, but it operates above political authority. The European Central Bank is even more independent. No elected government can override its decisions. The Bank of England is technically nationalized, yet the government cannot dictate its policy choices. Central banks don't need to be owned to be powerful. They shape the environment in which ownership itself operates. So, who actually controls them? The answer lies not in their bylaws, but in their constraints. The most powerful influence over central banks comes from the global financial ecosystem surrounding them: bond markets, mega banks, sovereign wealth funds, hedge funds, and international institutions. These players do not own central banks on paper, but they own the consequences of their decisions. They reward policies that keep markets stable and punish those that threaten liquidity. To find the real owners of global banking, follow the flow of interest. Every mortgage payment, every business loan, every government bond generates interest. That interest flows upward into the hands of pension funds, insurance companies, asset managers, sovereign wealth funds, and even central banks themselves. These institutions hold trillions in financial assets. They are the creditor class, and their most prized possession is sovereign debt, the bonds issued by nations themselves, not because these bonds produce huge profits, but because they represent stability. When you hold a nation's debt, you hold influence over that nation's future. The global banking system rests on this foundation. Whoever holds sovereign debt holds power. But there is another layer most people overlook: the invisible force that determines whether the world grows, stalls, or collapses. Global liquidity. This is the moving ocean of money that expands when banks lend and contracts when banks pull back. Most people believe money is created only by central banks, but the majority of money circulating in the world is created by commercial banks when they issue loans. Every new loan creates new money. Every repayment destroys it. This expanding and contracting process, multiplied across thousands of banks and millions of households, creates a financial climate that even central banks struggle to control. When banks feel confident, money surges into existence. Housing prices rise, stock markets climb, currencies strengthen, governments borrow more. When banks lose confidence, money evaporates. Credit tightens. Businesses fail. Currencies weaken. Countries descend into crisis. This invisible pulse of liquidity determines the rhythm of the global economy, and no single entity controls it. It is the collective outcome of billions of financial decisions made every day. That is why the question, who owns the banking system, is far more complex than it seems. While the system is shaped by governments, constrained by central banks, and fueled by investors, its true engine is collective confidence. Your confidence, mine, and the public's willingness to borrow, spend, invest, and believe that tomorrow will resemble today. Confidence is the oxygen of modern finance. Banks cannot survive without it. Governments cannot function without it. Markets collapse without it. And confidence is the one resource no institution can create. No banker can print. No government can legislate. It is earned slowly, lost quickly, and once gone, almost impossible to rebuild. History shows that when confidence breaks, whether in 1929, in 2008, or in countless crises across nations, the mightiest institutions crumble. Banks fail, currencies die, governments fall, and the people who were told the system is safe discover that safety was only an illusion. So, after all this, who truly owns the global banking system? Not a family, not a secret cabal, not a single country. The global banking system is owned by the institutions that depend on it, the governments that rely on it, the investors who feed it, and the citizens whose trust keeps it alive. It is an empire without a throne, a hierarchy without a king, a machine that runs because no one can afford for it to stop. Ownership is not possession. Ownership is dependence. And today, the entire world depends on banking to function. That dependence is ownership. If this gave you a new perspective, hit subscribe. History has the answers, and I'll show you where to look.